Welcome to Boston Real Estate Times. Our guest today is Ameek Ponda. He is a partner at Boston law firm of Sullivan and Worcester, and he specializes in real estate, especially in REITs, real estate investment trusts. And those of us who may be familiar with this already, that Boston was the ground place of mutual funds, and real estate is a sister or brother of mutual fund industry in real estate. And we are really going to talk to Ameek today about how the REITs industry has evolved here in the United States. And Ameek is also not only an expert, but he has also written several papers and had done some serious work on REITs. So Ameek, welcome to our show, and thank you very much for your time.
Thank you, Upendra, and thank you to the readers and viewers of Boston Real Estate Times.
Excellent. So now let us let's first of all give us some sort of a historical perspective about REITs. When it really started and when it really picked up momentum, and how it has diversified. That today it includes a wide spectrum of properties, which even we cannot imagine that it has so much under its arms.
Yes, of course. Thank you. So the thesis of a REIT has been around for a very long time, well over a century, that there should be something, just like we have mutual funds for stocks, that we should have mutual funds for real estate. So a kind of democratization of investment so that small investors can own a piece of large, well-diversified, professionally managed real estate portfolios. So the idea of a REIT goes back to even before we had an income tax. And then a little over 100 years ago, when the United States adopted an income tax around the time of the 16th Amendment to the United States Constitution, that put a damper on REITs, because as originally contemplated in those very first internal revenue laws, there was tax to be paid at the company level, and then again on the same profits at the shareholder level. Mm-hmm. And those two levels of tax are just anathema to real estate investing. There should be one level of tax, like in a partnership or a tax flow through. So at the real estate industry had been clamoring for decades that there should be something like a REIT, which would have a single layer of tax on the real estate profits. And in 1960, during the Eisenhower administration, that came to pass. And we had our first REIT legislation, income tax legislation for REITs in the United States. But it was still something of a sleepy backwater, because it was just too confining, not in the kinds of real estate that could be within the umbrella, but the kinds of related services that the company could provide. It just was very clunky. It wasn't a good piece of legal technology or legal software.
So Ameek, when we're talking about, wanted to clarify, we are just talking about the commercial real estate here, or residential, or all type of real estate?
All types of real estate. So from the very beginning, the concept of real estate and REITs have been very broad, but the statute was written in a very confined way in 1960. But it was an important watershed moment, because we had our first REIT statute. And then in 1986, which is the biggest change in the tax law that we've had in a generation or two at this point, the 1986 Act changed many, many, many things. But one of the things it did is it made REITs a more viable piece of software, a piece of legal technology that could apply to real estate markets as they actually breathe and function. And so from 1986 onward, we see the REIT industry just growing by leaps and bounds, and the REIT idea, the REIT thesis, being applied to even more and more different kinds of real property. So, for example, the original.
Ameek, I have one more question.
Yeah. Please.
So, say between 1986, when REITs really take off, and say between 1995. So in this year, how many REITs were roughly existed at the time in the United States?
If I had to go back to 1995, it was which is still very young in the REIT industry. It might be about a couple of $100 billion, maybe $300 billion back then.
And what is today?
I think it's well over $2 trillion. So it's grown.
Huge growth. Yeah.
It's enormous growth. It's enormous growth. And some of and as I said, the REIT thesis has proved itself over and over to be a very valuable thing for investors, for real estate property managers and professionals, sponsors, and also, Upendra, from a societal perspective, we used to have a boom bust cycle in real estate, which would then jeopardize the banks and the lenders and create systemic financial risk. And now in commercial real estate, it's not like the 70s and 80s, where if you had stress in the real estate market, you would take down the financial markets with it, the banking sector. And then you'd need bailouts and things like that. I mean, yes, the 2008 financial crisis has many of its roots in the real estate sector, but that's residential real estate, not commercial real estate.
Mm-hmm. I mean, I still remember, even till early, in 2000, and of course, last century, all the time I used to hear about real estate cycles all the time. Yes. And suddenly in the last 15 years, hardly anybody talking about, all this cycle. So
yeah, I mean, when you look at the financing structures for public REITs and you compare them to what preceded it, or even what's done today, the standard idea would be, there's a loan to value ratio in private real estate development, 70%, 60%, 80%, 90%, but whatever. I mean, 90% obviously being extremely aggressive, but in REITs, you don't see that kind of leverage. You see 30%, 40%, 50%. So there's a very large equity cushion in most public real estate companies, that if there is a downturn in the real estate market, it doesn't then go and create systemic financial risk, the so-called domino effect. And that has been an enormous, I think, often underappreciated feature of the REIT industry, that it's actually been good for the stability of financial America.
And most of us know basically, we know that we have office REITs, and we have a retail REITs, and we have a hospitality REITs, and we have industrial REITs. What are some of the other sectors which have emerged in the industry?
Sure, and the industry is still very much, you get these real estate verticals. So people, when they invest, they want to know that they're investing in a particular kind of REIT. So as you said, the office and retail and apartment have been around for some time. But even though these have always been part of the REIT rules, the fact that they are now public companies devoted to these sectors is kind of new. So cell tower and broadcast tower REITs, they've been part of the REIT framework since 1960s and 70s, but they are an enormously large part of the public REIT markets today. And that's a development that happened in the last 10, 20 years, not because the tax laws changed, but because the REIT idea, starting in 1960/1986, eventually everybody came to say, hey, this is a great way to own and operate and invest in real estate. Other examples, commercial timberlands, fiber networks, even as late as 1976, which is late because the REIT industry had been around for 16 years at that point. Of course, it seems in the rear view mirror, 1976 is a long time ago. But in the 70s, nursing homes became part of the REIT sector. In the 90s, 80s and 90s, hotels became part of the REIT sector. In the early 2000s, commercial timberlands, land became part of the REIT sector. Now today you have docks, marinas, pipelines, storage tanks, storage facilities, obviously self-storage facilities. So we really have, if it's real property, you name it, there's probably a REIT out there that's focused on it. Because
now I have another question for you is,
please.
If you look at so much diversification as far as the types of assets are concerned in the REITs, how does the REIT industry reflect the actual, the values of, like office buildings, so actual or the core or original real estate industry?
I'm sorry, so I understood the first part of the question. I didn't catch the last little bit. How does it reflect?
So, for example, if you say like I think the valuation or how the REIT industry is doing is a good indicator of
Yes.
how overall commercial real estate industry is doing, right?
Yes.
But now I want to segment a little bit away and look at the purely valuation of real estate, where you have one indicator of overall REIT index and all this stuff. Oh, this is how the industry is doing. But then you have a very small segment of commercial real estate, which is the office buildings and the retailers and industrial properties. So is there any correlation is still or?
Yeah, so let's talk about this. So I mean, the idea typically is that public share prices are a leading indicator of where private valuations are going.
Right. Yeah. Exactly.
That's true for technology companies, and that can also be true for real estate.
Sure.
And the basic idea is that real estate investment trusts, they are landlords. They rent their real estate. There's a little bit of nuances here and there, but the basic idea of a REIT is that you are an owner lessor of the real estate. So it's passive. Okay, you're not making widgets or there's not an assembly line where you're making iPhones, even though that's or Tesla batteries. You might own the building which you lease to Apple, or you might own the factory building which you lease to Tesla, and then they put in the assembly lines. So when REITs do well when their tenants do well, right? And if their tenants are not doing well, then of course the REIT can also be under stress. But as we've discussed, REITs are conservatively leveraged by and large. So there's an enormous equity cushion there that can withstand financial shocks. It's not great, it's not pleasant, but it does not present systemic financial risk in the typical situation.
Okay, now totally from the mature investor point of view, that I'm new, I really want to spend some money in commercial real estate.
Yes.
And if you can give us some sort of a guideline here or insights that now, I have say, $10 million. Should I invest in REIT or should I invest in, private real estate developer?
Okay, so that depends on that yes, and that is a question some people ask themselves, and I want to answer that in two ways, if I might. Okay, so one way is the way you've posed the question. I want exposure to real estate in my diversified portfolio. How do I get it? Do I go and buy the real estate directly, or do I go and buy a REIT stock? And then I have access. I own a piece of all of this real estate around America. And a little bit of that depends on how much you think you're going to, how much diversification you want, how much professional management you want. So if you go and buy real estate directly, are you going to actively manage it, operate it, take all the phone calls? A new roof is needed. Are you doing all of that? Because if you are, then there's a lot of value that comes with that, and you're much more of an owner operator. And you could earn some great returns doing that because there's sweat equity in that. Or are you more of a passive investor and you say, I want to put my money to work and I want professional managers to deal with that money and operate the real estate and decide when we're going to do the capex on the roof and when we're going to do this and we're going to do that. So those are two very different investments. But here's the real answer to the question you're asking, Upendra. REITs are already a very large part of the S&P 500, of the Russell. REITs are an enormous part of almost all the major indices. So when people invest and put money in their 401ks, and they put money in the S&P 500 or the Wilshire or the Russell, any broad-based index has REITs in it. And it has REITs in it that are in the timber space, in the cell phone tower space, in the fiber space. I mean, all kinds of stuff, not just shopping malls or apartments or office or nursing or hotels. When you buy into the S&P 500, a big part of what you're buying is REITs.
Okay, now I'm coming back to my other question I asked you earlier. So
yes, please.
It is the midway, for example. So okay, let's see. I'm going to give the same example of $10 million. Now, my question is, should I really go in the REITs and buy some stocks of REITs and all, or
Yes.
I choose, I become a limited partner in a company like, Davis companies or Bullfinch companies, or some other private developers and investors.
Yes, and so again, I think it depends on well, first of all, private investment opportunities and public investment opportunities are apples and oranges, right?
Oh,
Even
I just wanted to, okay, good, sure.
Absolutely, and there's all of that. But this is really, I think, a big part of the reason that REITs have taken off since 1986. One is that the 1986 tax laws made REITs much more workable. I would say from 1960 to 1986, they were kind of tone deaf to what the real estate industry needed. Since 1986, they're a very good fit for very broad categories of real estate. But here's the other thing. Prior to 1986, we didn't have passive activity loss rules. And I think if you remember that era, your average dentist, your average doctor would invest in real estate because through the interest expense leverage and the accelerated tax depreciation, they could shelter their earnings from their medical practice or their dentistry practice. So you had a lot of people investing in real estate who it wasn't even their full-time thing. And because of the passive activity loss rules since 1986, what you see is when you're talking about private real estate activity, you're talking about investors, builders, developers, who typically are full-time in that industry. Yes, you have professional investors, but you no longer have the average doctor and average dentist investing in limited partnership vehicles. The average doctor and average dentist pre-1986 is probably investing in the public REITs today because there's liquidity for the investment, they can sell. So that class of investors stopped investing in real estate directly and they moved into REITs probably. Now, if you happen to be an active real estate trade or business professional, the tax law still gives you many of the advantages that were available pre-1986. And it's those kinds of investors and people, theirs is a much more genuine choice. Should I put my money in a real estate operation, or should I go put it in a REIT? Because there's more of a, they can actually benefit like they did pre-1986.
Good. So I think, Ameek, you made a great point about how phenomenal growth has been in industry. Now, how do you look at the next 5 or 10 years about the future of REITs?
Yeah, so I mean, I continue to be very impressed, Upendra, with how much the REIT industry adapts to what the country needs, okay? And here's what I mean by that. We talk in the United States that the country needs infrastructure, whether that's build back better or this or that. Now, a REIT is not going to necessarily build a municipal waste treatment plant. That has to be built by state and local government. But REITs have been building infrastructure, and I think they will continue to build infrastructure. Docks, wharves, marinas, cold storage warehouses, fiber networks, cellular and broadcast towers. You're even seeing REITs build solar and wind infrastructure. So I think as the country uses different kinds of real estate differently, it will repurpose older real estate, and new real estate will be built. Maybe real estate that we can't imagine, like we can't imagine it, but to the extent we're building new energy infrastructure, there's a good chance that parts of that will be owned by REITs.
Yeah. Now, I also want to touch base on, because I remember for the first time I heard REITs when I moved to US. Now I'm hearing that this REIT concept is also being used in other countries as well.
It is. Well, it's so interesting you say that. I mean, this goes back to what I said earlier. REITs have proven to be just a wonderful innovation for investors, for sponsors, for promoters, and for society, because it reduces systemic financial risk. And other countries have looked at what's happened in the United States, and all over the world, they've tried to replicate that. So given the success of REITs in the United States, many other countries have adopted REIT statutes. Now, sometimes they haven't done it as well as the United States has. And as a result of that, it hasn't taken off in their countries. But some countries like Korea, Singapore, they've actually made it a very attractive vehicle. Lots of countries have adopted it. The country where you and I were born, India has REITs. But is it really, it's not the same. And everybody is entitled, every country is sovereign, and they can tinker with how they do things, and people are innovating. But I'd say it is a legitimate boast that the United States has been by far the most successful in making REITs successful.
Okay. So now, as with all this growth, what has been some of the legal challenges? Let's talk something about from the legal perspective.
Well, I've been very privileged because my firm was doing REITs before I joined the firm, and REITs, as we said, really had a renaissance in 1986. I was in law school 1989, 1992. I joined my firm in 1992. I've been there 30 years, and so I've grown up with REITs, which we were already doing. But the legal challenges have basically been to bring the technology and the structure and make it a known and understood construct for all the real estate asset classes that exist today. So going back, when REITs started, they might have just been offices and apartments, and then they went into nursing homes, and then hotels, then timberlands, then moving along, from timberlands to cell phone towers, casinos, optical fiber cable. So it's basically helping real estate owners and investors understand what these rules that were created in 1960 and had a renaissance in 1986, how those rules can be put to work for them. And so one of the things I've spent in my career, and our firm now represents, I think something close to 20% of the public REIT market. So no, it's huge. We have a lot of wonderful clients, and all of these real estate verticals that I mentioned, we have a client in every single one: cell towers, fiber optic cables, data centers, nursing homes, hotels, timberlands. It really is an amazing legal technology. I think the fun part of my career is helping real estate investors and sponsors understand just how they could be better with a REIT in their structure.
Excellent. Now, as we come towards the end of the interview, Ameek, your last word on REITs.
The best is yet to come.
Oh, really? That's very, I think let us, stop our interview at this wonderful note. And really, it was a pleasure talking to you. And thank you so much for your time, Ameek.
Thank you, Upendra. And thank you to your readers and viewers. It's so nice to see you again.
Excellent.